Today we shall be talking about the rights issue and the bonus issue, the meaning and the difference. To begin with, what is rights issue? A right issue is the shares which are offered to the existing shareholders. The company gives an offer to the already existing shareholders to buy new shares. The shares are offered at a discounted price. For example, a 10 rupee share can be offered at a price of rupees 7. So this is the discount which the company is offering to the existing shareholders. The benefit is given to them to buy the more shares at a discounted price. This is an option given to the existing shareholders. They want to avail the option, well and good. They have the right to deny this option as well. If you are an existing shareholder of the company and you are very happy with those shares, you can easily avail this rights issue, which is the benefit availed by the shareholders to buy more shares of the old company at a discounted price. The Companies Act provides that the company's capital can be increased by issuing further shares to the existing shareholders at the discounted price in the form of right shares. So what benefit is the company getting? Company is offering a choice to the existing shareholders. Because you have already purchased our shares, because you are our shareholders, we are giving you an offer to buy more shares, and the offer is you will not have to pay the market price for the shares. We will be issuing you at discount. So what is a right issue? It is a right which can be exercised by the existing shareholders by subscribing to the new shares at a discounted price, but the condition is that you have to avail this offer within a specified time period. There is a time slot in which you can avail this offer. You have to spend the money to buy new shares. They are not offered at free of cost, but they are offered at a discount. Right issue is an offer. It is a choice. Any shareholder who exercises this right can buy the shares and increase the shareholding in the company. For example, if you already have 100 shares and the company is offering 20 shares for every 100 shares held, and you avail this offer, so now you will be having 120 shares of the same company. So your shareholding in the company will automatically increase. Post rights issue, the number of share will increase for the company, and this will dilute the value of the share, which will automatically affect the share price in the market. The raised capital from the rights issue, it can be used by the company for any business need. You want to buy a new plant and machinery, you want to do any XYZ from this money, you can do that. Or you can use this money which you have received from the shareholders for the settlement of any debt, or you want to pay off your creditors. You are free. The company is free to pay the creditors with this amount. We talk from the shareholders' point of view. They have three options. First is they use this right of right shares and purchase the additional shares at a discount. Second is they can ignore this right. You don't want to buy more shares of the same company, you can ignore this right. It is very well okay with the company. And the third is they can sell the right to some other party, which is also allowed for a right issue. XYZ Limited decides to make a right issue 1:2 per share at 15. The price of the share in the market is rupees 20. So 5 rupees per share is the discount offered as a right issue. The company issues one right issue for every 2 shares held, and those who want to avail this offer, they can. Now coming over to what is bonus issue. Bonus issue is also the shares which are issued to the existing shareholders. But the point is, these bonus shares, they are issued free of cost to the original existing shareholders. When we were talking about the right issue, they were not issued for free. They were issued for a price. No doubt the price was a discounted price as compared to what is existing in the market. But we talk about the bonus issue, the shares, they are issued free of cost to the existing shareholders in proportion to their holdings. It can be 1:2, it can be 1:3, depending on the company's policy. The shares are issued in relation to the number of shares which are already held by the shareholders. Whenever the company gets huge amount of distributable profits, sometimes the company gets accumulated profits it has. So for that profits, they can transform this capital and divide it among the shareholders in the proportion of the holdings. Okay. The members, the shareholders, they are not required to pay anything for such shares. You don't have to pay. Being a shareholder, you will be issued bonus shares totally for free. You don't have to pay anything. Sometimes instead of paying dividend, the company issues bonus shares to make the shareholders happy. To quote an example, it can be 1:7. One bonus share will be issued for every person who holds 7 shares of the company. The shareholders' equity does not dilute with respect to bonus shares. In right issue, the equity dilutes, but here it does not dilute because the shares are issued in the same proportion and the equity percentage will remain the same as before. A bonus issue is generally considered when the company cannot pay to the shareholders due to the financial crunch. Sometimes the books of account, they reveal that you are making profit, but you do not have cash. There is cash crunch. In such a situation, when the company has shortage of hard cash, it can give bonus shares to the existing shareholders. Sometimes the company has cash, but it wants to restrict the cash outflow. It does not want to spend that cash. Therefore, also sometimes the companies, just in order to meet the expectations of the shareholders, what they do is they issue bonus shares. Bonus issue does not involve any cash outflow. This increases company's share capital. When you will be paying cash to them in the form of dividends, say, so you have to arrange the outflow of cash, but in bonus shares you are relieved. The company is relieved from any cash outflow. Only the share capital will increase. Post bonus issue, the company's share price will reduce in the market because the number of share increases. It creates more liquidity to the shareholders as they can easily sell these shares in the market and they can get cash because they are getting something for free. If you want hard cash, you can easily sell it in the market. The shares become more affordable in terms of price for the retail investors. For example, XY Limited makes a bonus issue 1:2. For every 2 shares held, additionally 1 share is issued free of cost. This will increase the liquidity in the market. Now we come to the differences in the tabular form. The first point is the meaning. Right issue means the shares which are offered as an option, as a choice, as a right available to the existing shareholders. They have a right to buy more shares at a discounted price. They have this right to buy more shares at the discounted price within the stipulated time period. Now, what will be that discount? This will be fixed by the company's policy. So, this is the meaning of the right issue. When I talk of the bonus issue, the shares which are issued by the company to the existing shareholders free of cost. They do not charge anything to issue bonus shares. But the bonus shares are also issued in proportion to their shareholdings. And where does this come from? They come from the accumulated profits and reserves of the company. Second is the price point or the payment point. If they are issued, the right issue, they are issued at a discounted price which is lesser than the market price. The subscribers have to pay for the right shares. The company is giving them a right. Company is giving them an offer. Company is giving them a choice to buy more shares. Okay. And when we talk about the price, bonus shares are issued totally free of cost. Next point is renunciation. Renunciation means you say no. You don't want those shares. You want to give up, or you don't want the right, or you don't want these shares. So from this point of view, the shareholders, they have the full right to renounce their rights. Supposingly me, a company, I'm offering you right issue. You have full right to say no. We don't want this right issue. It's okay. It's equally okay with you people and equally okay with me as a company. So the shareholders, they may fully renounce their rights, they may partially renounce their rights. It can be possible that they are offered 100 shares and they say that no, we only want 50 shares. That can also be okay. So for the renunciation point, in the right issue, the shareholders, they have the liberty to renounce their rights either fully or partly, right? Now, as far as the bonus shares are concerned, no such renunciation. Why? Why no such renunciation? Because free is everything is good, right? If the bonus shares, they are issued and free, so why will somebody say no? You don't want to sell it in the market, keep it with you. Or you want cash, you just go get those bonus shares and sell them in the market. So there is no such renunciation because bonus issues are issued free of cost. Next point comes is the objective. right issue. Why is it issued? Because they wanted to raise fresh capital for the firm. No doubt the shareholders they have to pay a little price, even if it is a discounted price, but the company will get a lot of cash, right? So to raise fresh capital for the firm, the company may issue right issue. But bonus issues, they are issued to bring market price per share within a more popular range, because they are issuing it for free. So no fresh capital will be collected by the company when they will be issuing the bonus shares. Next is the paid up value point. The right issue, they can be fully paid up, they can be partly paid up. Both ways are allowed. But for bonus issue, the share has to be fully paid up. A point is that they will be issued free of cost. The company will not be charging anything from the existing shareholders. And the second point is those shares have to be fully paid up definitely. Next point comes of the minimum subscription. When a right issue is issued, there is compulsory that the company has to get a minimum subscription. The company, if you do not receive that minimum subscription, you have to refund the entire application money. So minimum subscription clause is mandatory and compulsory when we talk of the right issue. When we talk of the bonus issue, there is no clause of minimum subscription, because again the same thing I repeat, that bonus shares, they are issued free of cost by the company. Therefore, no minimum subscription clause, there is no renunciation, just as I told you. Next point is the creation point. Additional shares are created in the right issue, but in the bonus issue, they are created out of the accumulated profits and reserves by the company. Next point is the purpose of issue. Right issue is done by a company when it wants to raise fresh funds, but at the same time it wants to give a chance to the existing shareholders that they can increase their shareholding by subscribing to the right issue. But here, when a company has huge accumulated profits and reserves, in that case the company issues bonus shares. Company wants to give a reward to the existing equity shareholders. That is why bonus shares are issued. Next points come up the creation. In right issue, additional shares are created for this issue, but here shares are issued from the free reserves, from the capital redemption reserve, and from the securities premium, either of these. Okay, next is the transaction point. The company receives cash from the shareholders, so it's a cash transaction. No doubt they will be paying a little on discount, but they have to pay it. And when we talk about the bonus shares, there is no cash transaction because everything is issued for free. And the next point is factors affecting the share price. Due to the dilution of the value of the shares, the share price are affected in rights issue, and the share price is reduced according to the proportion of the bonus shares issued in this case. So here we come to the end of the article. I hope I have made the things very clear to you. In case you have any doubts, please feel free to ask me in the comment section. Please like and subscribe to my channel. Thank you for watching. Stay safe, stay blessed.